back. Buckle up. We've got an amazing show for you. We're talking interest rates. How about the Toronto condo market meltdown? And of course, we can't have an episode without talking about Trump and Trudeau again putting his foot in his mouth. Does it never stop with that man?
I can't wait to hear about Governor Trudeau. And then my favorite topic, insane development charges and whether or not Alberta will boom or bust. And we're going to find out when will this boom turn to a bust. We're going to find out from Mr. Alberta himself. Folks, get ready. It's going to be an exciting show.
Listen in. Hey folks, just a polite reminder, subscribe, comment, like, share. Let's get those algorithms cranked so we can bring in more great content.
All right, Patrick, I'm going to kick off this show. I'm going in, I'm going hot, I'm going right to the meat and potatoes of this. What's going to happen? Give me a Patrick prediction on interest rates tomorrow. By the time this airs, it's going to be Friday. The interest rate announcement will already have been done. But just so everybody knows, we're taping this on Tuesday, December 10th. So Patrick, what is the Patrick prediction?
So frustrating, right? I'm traveling this week. We got too much going on, so we couldn't hold off doing the show. My prediction, I don't know. I really am kind of tossed with this one. The Bank of Canada.
Don't be a politician now. Don't be a politician now. Give me your prediction. Just give it to me straight.
Okay, I'm going to give it to you. Let me think this through a little bit. I think, again, the Bank of Canada is between a rock and a hard place of what they got to do. If they don't cut rates, the recession that we're now in is going to only get worse. On the other side of that, if they do cut rates, we're going to get our butt handed to us with the US dollar. I mean, there's many factors. Okay, I think they're going to cut half. 50 basis
half a point, 50 basis points.
Yep.
Wow, that's good. That's a pretty big cut though, Patrick. So let me ask you this then. Let me go a little deeper. And I'm going to show after what all the big banks are thinking is going to happen. But before I get there, what do you think would have been the cut if we wouldn't be in the kind of Trump mania component of that we're in right now, which is stock market's at an all-time high. We got tariff talks, which is introducing. I mean, listen, Canada's currency is always very important. Where we trade in relation to the States is very important to our country. But these tariffs and these tariffs talk and all of this stuff that's happening, our dollars now becomes even much more important of how that all goes down. So do you think it always would have been 50 basis points, Patrick? Or do you think the game has changed? Because I'm kind of feeling like the game's changed a little bit.
Well, it has changed a little bit, but let's get back to, why do they need to lower rates? So the future state of whatever tariffs might represent is only one component. I don't think the Bank of Canada can hang their hat on any of that because nothing's come to fruition yet. And Trudeau continues to put his foot in his mouth. Let's not even go there. But let's just talk about why they would lower rates even more. And fundamentally, it's because the recession is, in fact, here. We can talk about Polaz, former finance minister, saying,
hey, listen, make no mistake. This is not some vibe session or vibe,
whatever they called it. Got nothing to do with vibes. We're literally in a recession and it's only getting worse. So the point is this, is that we've seen the unemployment numbers continue to go up. We're seeing businesses struggle. And, the Bank of Canada is looking into the future going, we actually need to keep things pumped up a little bit. So I think that's why we're going to see 50 basis points. The economy is definitely trending down. Manufacturing continues to trend down. All of the things that we've talked about so many times are now showing up. And so I think they're left with the 50 basis point cut. I think if I go future state, I think in the spring they're going to take a pause, but I think they have to do 50 basis points tomorrow. We'll see.
I'm a little conflicted, Patrick. If it was literally 3 weeks ago, a month ago, I would have said the same thing as you. I would have said 50 basis points for sure, maybe more. I would have thought. But man, the stock market is just ripping, and I'm curious. And I'm like, I love it when I look at my Wealthsimple account. I'm like, wow, that's pretty incredible in the last month. But then I'm like, gosh, I feel like they're gonna hold back on their rate cut because of that, because that's rate cuts there is going to fuel more stock market. And I'm curious. And listen, nobody knows what the hell these guys are thinking, even if they're thinking. There's no doubt they have their models and so on and so forth. But I'm just a little concerned. And usually you're the concerned guy. Usually you're the doomer, gloomer, boomer. Today, I'm being the concerned citizen here, thinking like I'm concerned the stock market ripping is going to prevent them from doing a 50 basis point cut and them only doing a 25 basis point cut or maybe even, unfortunately, doing a pause. Man, I would hate that. I hope that doesn't happen, but I'm a little concerned about it.
Well, I mean, you make a good point, but at the end of the day, Canada's got really nothing to do and has no impact on stock markets. So, whatever they do isn't going to change any of that. So ultimately, the U.S. continues to do quite well economically, way better than what Canada's doing. And so when we look at, again, we have to go back to why do they want to lower rates? Well, first off, inflation is way under control. As a matter of fact, arguably, if you break out things like rent increases and or you break out the interest portion of things, or like when you look at CPI overall, we're well under 2%. So they have every reason to actually bring those rates back down. Arguably, we're going to struggle with inflation as the Canadian dollar weakens against the U.S. I mean, there's lots of debate around that. But, as our dollar gets weaker and given how much business we do with the U.S., our cost of goods is going to eventually go up. And raising interest rates or pausing isn't going to change that fact. So all to say that I really believe that given what's happening economically, we do have to lower rates. Either that or they got to increase them and shut this whole thing down, reset, and go forward from there. So, that's why I'm looking at it. But I mean, like you, but let's go back to a couple of things, JG. When we look at, and we've said this many times, because when we're always looking at through the lens of a real estate investor or what's going to happen economically. You and I both know that real estate deals are happening on an ongoing basis. You just did a great deal in your own hometown because of that. That's all part of it. But when we look at the store of value, we cannot negate the fact that our currency is losing huge value. So I want to just, insert here, we need to get capital put to work. And that can look like real estate. When we look at the price of gold, when we look at what's happening in Bitcoin, the money is going to those stores of value. And as investors, we have to look at all of those things. A house priced, by the way, if you go back 20 years, you look at a house priced in gold, an average price of a house priced in gold, it was like, whatever, let's say 650 ounces of gold. Today, 271 ounces of gold. Now, we look at gold as real money. At the end of the day, we think our real estate prices are going up or our hard assets, those stores of value are going up in price. It's not. It's our currency losing value. That's the bottom line. We have to get our money to work. And so back to interest rates, this all impacts where things are going to go with interest rates. I'm going to stick with 50 basis.
You're gonna stick with it. I love it. I do want to see on the next show. I'd love to see a chart from you because I know you're a chart specialist now with some new tools you got. I want to see a chart from you on the price of real estate in gold, and it'll be fascinating to see the price. What has happened to real estate in the priced in gold? That'll be very interesting.
Okay. So do you want to know what it is? Real estate prices have gone down.
That's my point. That's exactly my point, and what I probably figured happened. Yeah. Exactly, 100%. Now, so the average 5 of the 6 big banks are thinking 50 basis point cut. So that's kind of the consensus right now on the street, but we'll see. I mean, things, obviously the big rumors are out. You'll see by the time this episode airs, you will have the truth of what actually happened. We'll see. Now, Patrick, we got a lot to cover today, so we got to move on. We got to move on quick, but this is fascinating. The 5-year bond taking a dive. I mean, I don't want to dramatize it, but this is taking a dive. It was on the last show. You and I were talking about how bond rates were going up, and it was 3.13. I remember here we are, 2.85. This 5-year bond has never been so volatile in the history, I don't think, of like its existence. It's just like a roller coaster. And these things are supposed to be like steady Eddie. This is not meant to go up and down like the stock market. But gosh, now this I like to see because for me as a real estate investor, because this is where real mortgage pricing is going to go. And I think this is an indicator of what the street or what the market thinks is going to happen what the Bank of Canada is going to do, which is they're going to decrease according to the market.
Well, when we see bond yields do this, this is just bond rates. When we look at what's going on in the bond market, it just speaks to the overarching uncertainty. And, money's going in, then it's going out. People and, corporations, just the economy in general doesn't know what's happening. There's so much uncertainty, and that's why we're seeing the volatility.
Now, I think we have to talk about Governor Trudeau. I mean, Prime Minister Trudeau. I don't know what to call him anymore, Patrick. It's like Donald Trump speaks, and he's able to rebrand something just by sending a tweet. But I thought this tweet that he wrote was hilarious. Now, you follow this stuff much more closely than I do, Patrick. What's been kind of happening out there?
Well, I mean, it just speaks to, Trudeau. Listen, everybody knows my view of Trudeau and our federal government, and I think, the majority of Canada's finally come to that similar conclusion. I don't need to get into name calling, but listen, he tries to front run and get into Mar-a-Lago and have a conversation with Trump. And ultimately, he said, tariffs will be devastating to Canada. Well, Trump looks at him and goes, yeah, that's too bad. Ultimately, maybe what we should do is you should become one of the states, and you could be the governor of it. And now he's literally mocking Trudeau because Trudeau has gone on to actually trash talk MAGA, and talk about what Trump should do. And considering the conservatives are following that same path. So rather than understand that, you can't push the U.S. around, and you certainly can't push Trump around. And when you look at the team he's surrounded himself with, Trudeau doesn't stand a chance. He is in the deep end of the pool and he can't swim. As a matter of fact, somebody's tied weights to his feet. He's going down in a freaking epic way. Like, it's just ridiculous. It's beyond ridiculous. It's infuriating. I have to use my most stoic kind of thought process just to not get wound up about it. It's embarrassing. It's crazy.
Now, any news on the? And I know it's not on our agenda, but gosh, I can't help but talk about it. What about the Doge? Is the Doge still happening? Where are we at with the Doge?
Yeah, Doge, Musk, and Vivek. I mean, you can't come up with two better people to drive the Department of Government Efficiency. I mean, two mega business owners who know everything there is to know about efficiencies. Vivek is himself, built a multi-billion dollar business. Of course, Musk is Musk in terms of how he operates. I love it. I think it's going to be so freaking painful over the next 12, 18 months. It's going to be a ripple effect right into Canada. We're going to feel it. But ultimately, they're going to hack and whack and cut to the degree they can. And yes, they got to get a number of things through Senate and all the things they got to do. But they're going hard. And this has always been my thing, which is run the country like a business and quit going into this huge debt, these huge deficits. Run it like a business. And ultimately, we have politicians who have no clue around business. And I'm speaking of Canada. Now you look at what Trump has done. He himself, uber successful in business, like it or not, doesn't matter. But you look at Kennedy, you look at Vivek, you look at Musk, you look at Tulsi. I mean, these people are brilliant in all aspects of what they do. I'm very, very optimistic about what the U.S. is going to do going forward, and it has a huge impact on Canada, and I hope some of it rubs off on Canada at the end of the day. My concern is how much damage Trudeau can do between now and the election.
Oh, I know, buddy. I know. Listen, you just pick yourself up there. You're going to be okay. But I'll tell you this. This is a chart here. I just put up a chart about, government getting bigger, entrepreneurs, we're having fewer and fewer entrepreneurs, and we're having bigger and bigger governments. You and I don't like this naturally. And I think the average person should really focus on, pushing entrepreneurship and not more government. But more on that a little bit later. I do think, and remember, Patrick, when this whole thing started, you'll remember it was 1 month ago, buddy, 1 month ago. I said that if anything can happen with this Doge is that if it can change the culture around and if it could start to shift the culture, it will be a success. And the one thing now, I got to say, the problem with social media and the problem with YouTube and the problem with algorithms nowadays is they feed you what you want to see. And as a result of this, I seem to be seeing a lot of cheering for the fact that this is happening. A lot of people are excited about slimming the government down. A lot of people are excited about making sure that we keep these things in check. People are excited about returning, to key concepts like work ethic, like, you know what I mean? Like having a purpose and not just living off the government. So these are, to me, really good changes. And I 100% agree with you. I hope this rubs off on Canada. But that being said, maybe I'm only seeing what I want to see online. I mean, that's unfortunately the algorithms do that.
Well, you look at what's happening right now. Let's look at France melting down, Germany's melting down, the UK is melting down. I mean, like literally, they are melting down economically. The most regulated countries in the world are finally coming off the rails. And when we even look at the trend of Australia, which is a lot like Canada, we are doing more regulation, more government control, and ultimately we see the future. And this is what's frustrating about it, as capitalists, as libertarians, if you will, or just looking into the future. I mean, if you ran your business like that, or I ran my business like that, we wouldn't be in business. Nobody would, by the way. So when I look at the public sector and the bureaucracy that the government continues to create, it is costly, and they keep putting free in front of things. And for some reason, people don't get it. Nothing is free. They're spending your money, your tax dollars.
Yeah.
And I mean, think about it. We're taxed on our income. We're taxed on what we spend. We're taxed. I mean, it's crazy. And people go, I want free dental. Okay, well,
it's not free. You're paying for it. You're paying for it in your taxes.
Yeah. It's nuts. Anyway, we can go on.
But this culture, this is the culture I'm talking about, Patrick, where, and this, to me, we'll see. Time will tell. So far, I like what I've seen so far. The other thing I've seen, and I've seen this in Canada, by the way, and you and I are both going to a big event this weekend, big real estate event. We're both speaking. You're hosting. You're intimately involved. I get to pop in and be your wingman for a little bit, be your arm candy, if you will. But
you're my buddy. You make me look good.
I'm curious to see, the sort of the vibe of people down there, and I'm going to have these conversations. But I will say, a lot of people that I don't typically talk politics with, I don't typically talk about this stuff with, they've come out of the woodwork in the last month and are much more open about this stuff. And that's the cultural shift I'm starting to feel. And I really don't want to, maybe I'm just seeing what I want to see, and I'm always cautious about that. But man, if we can make that shift and start to celebrate things like entrepreneurship again, start to celebrate things like hard work, start to celebrate things like, all those things that I feel we've lost, I think it's going to be very, very interesting. And I kind of feel like it's starting to shift. I hope it just continues. We'll see. Time will tell.
It is shifting, and we're going to see a real shift from the wokeism that's really, really taking place right now. And I think that's a healthy shift. The pendulum has swung way too far to the left, and even too far to the left for the left. And so I think it's going to start to come back. I'm looking forward to that.
All right, Mr. Alberta, let's shift gears to Alberta itself. Now, before we talk about all the good things going on with Alberta, do you want to put out your PSA right now? Like, do we want to start with your public service announcement, or do we want to finish with your public service announcement? How do you want to slow play this?
Well, let's leave the public service announcement to the end. I'm going to make a bold prediction, and it's a warning. I think real estate investors need to have a heads up. Pay attention. I've been through this cycle before, and I'm telling you right now, Alberta's going through a cycle, and we have to be ahead of it. Know what's coming. That's all I got to say.
Okay, so we'll keep the PSA for the end. Now, let's talk about the big thing still driving Alberta is affordability. There's no doubt about it. People in Alberta are yelling, screaming, crying, that everything is too expensive now and so on and so forth. But when you compare it to the rest of the country, it's actually cheap. It's like Alberta's on sale, as you always like to say, Patrick. And I think this chart, illustrates that. And we have many other charts to show in that regard.
Yeah, I think it's all ultimately within the REIN community. We talk about what's going on in Ontario versus Alberta all the time. And so many members of the REIN community understand that, there is stark differences politically, there's stark differences economically, there's stark difference in the real estate world between Alberta and Ontario. But when you talk to the general public, they're in this world called Alberta and Calgary housing prices are off the charts, and Edmonton, we're going to lose control. Like, it's nuts. But ultimately, when you look at the affordability, part of what drives the immigration and the interprovincial migration into Alberta is affordability. When you look at number one, economically, they remain quite strong. We see unemployment rising, but we need to break that down a little bit. And unemployment is rising primarily because there's lots of jobs, but they all got filled. So it looks like there's this big economic downturn, but unemployment's high because the glass is full. There's just more supply of human resources than there is demand. And it's just an interesting dynamic that we've never faced before. And so it looks the way it looks. So when we look at what's happening in Alberta, if you live in Alberta, everything seems ridiculously priced. But when you look at it from an aspect of what's going on in the rest of the country, Alberta in general is in fact on sale. Housing is in fact significantly less expensive.
In inflation, though, Patrick, I'll just jump in. Inflation in Alberta is outpacing the rest of Canada. Inflation in Alberta is 3%. Rest of Canada is now at 2% CPI, that is. So, that's partially probably where the Albertans are crying a little bit.
Well, they're actually complaining about how.
Or are you just saying the Albertans are just crybabies in general? Is that what you're saying?
When it comes to housing, they are. But that uptick in, for example, in CPI, you got to unpack it. We can't just look at CPI as this big number and go, oh, it's 3%, and everything else in the country is 2%. So we have to look at where inflation is. And inflation, one of the things that's happening in Alberta is gas prices have gone up. We have to look at electrical, we have to look at natural gas, and we certainly have to look at rent. So when we look at CPI and break it down, yes, it's definitely going up compared to the rest of the country. But when you break it down, it's just catching up is really what a lot of what's happening as well. And keep in mind one thing is that salaries / wages are higher in Alberta than they are anywhere else in the country. Now, that may have shifted a little bit so that things are more on par, but your cost of living is significantly lower given the wages that are happening. And the one thing that isn't driving CPI, and although they indicate that it is wages are not keeping up. And so there has been some wage increases, which would imply that CPI is going up, but it's not driven by wages. So we kind of have to look at that number and take it a little bit, I don't want to say take it with a grain of salt, but we have to break it down and say, where is CPI? Where is inflation happening? And, food is one of those things. Fuel is another, as an example. Rent is another. Cost of shelter.
Now, we'll talk more about rents after, because I got some very interesting charts on this. Actually, something happened last month in late October that hasn't happened in like 3 years. So we'll talk about that in a second. A couple fascinating charts. One of them is Edmonton home sales versus building. This is an interesting chart here that shows, Edmonton's home sales. And you always talk about how Edmonton trails Calgary. And it took a little while for that to happen here, Patrick, but it is starting to do exactly that, which is, as you say, it typically does. And but the construction here in Edmonton is going up a little bit, but still, in terms of kind of where it was in 2008, look in 2008, like you almost approached 30,000 units. And if you look, this is condo and single family. And then look at like 2015, you got to 25,000 units. So Edmonton has tapered their construction compared to the past, from what I could see here. Not necessarily what's happening in Calgary. Calgary's off the charts. And in fact, we've inverted the home sales to the construction chart. And you could see here, they had a boom in 2007, 2008, just like Edmonton. They had a boom in 2015, just like Edmonton. But here we are. Now they've crossed. In fact, Calgary has never built this much in the last 25 years. That's as far back as this chart goes. Fascinating, isn't it?
Well, it is. It's not surprising. This is something that, happened back in early 2000s when, we saw construction booms happening in both Calgary and Edmonton, to a lesser degree, of course. But you see a couple of things. Number one, what is the impact of less regulation? And Alberta is, it's cheaper, it's easier. Zoning, permits, the cost of construction in terms of getting, the cost of from regulations to taxes to permits to zoning, all less expensive. And it's kind of open, you just build relatively. When you look at what's happening in BC and Toronto, and we look at all of the costs of zoning and permits and the time it takes and the bureaucracy you go with, it's no surprise. It just actually indicates, and it's a perfect example of rising costs because of bureaucracy. And so I just want to point that out. What's happened in case of Calgary is because of that, everybody got onto the construction boom, if you will. We then were seeing so much immigration come in. And now what we've are starting to experience is that crossover where we're starting to see some overbuilding happening in Calgary. It's going to take some time, but we're going to see some pressure on prices because of that. And we're also going to see pressure on rents because of that. When you look at what's happening in Edmonton, as we look into the future, we can see that right now, Edmonton is kind of everybody's building. We got a lot of things going on. And so it's only to say this. So my cautionary note and what I'm putting out there right now is Alberta will go into an overbuilt cycle again, but there's lag. So you look at what everybody's riding the wave right now. Everybody's going to be a real estate genius. And in probably, I'm guessing in Edmonton case, it'll be about 3 years. You're going to start to see that overbuild situation show up. And let's make sure we share the chart on what's happening in the multifamily space. And the multifamily space is going to cause another ripple because of the MLI Select program. Great program, by the way, allowed a lot of builders to get into the multifamily space. But I want to shine a light on a couple things. And let's use Edmonton and Calgary as an example, but we could use any city. A lot of real estate investors buying small multis. And I'm talking, let's say, 12 to 24 units. Just use that as an example. And those buildings are, let's say, 40, 50, 60 years old. And you look 20 years down the road, now they're 80 years old. So maintaining and then rebuilding and all of the things that, doing facelifts with them. You've got all this new stuff coming onto the market, and your tenant profile, most of that tenant profile is going to trend towards new build. They want new services. They want shiny. They want all the things that are more modernized. They want fresh paint. They want the building to look great and look cool. So I think we're going to see a real shift as this MLI Select program has been awesome in terms of financing. So lots of investors, it's the only thing they could do that made any sense, to put capital to work. But I think those that are holding on to some old buildings, if you're not upgrading and maintaining and putting money into those buildings, you're going to struggle in a few years from now.
This is interesting, Patrick. This is a question of generations. I literally, an hour ago before this show, I was in a meeting with a client, and this client, I'm not sure her age. I'm going to ballpark it at, say, 55, maybe late 50s. And we're looking at converting her single family home into 2 units, which is classic what we do here at Visture. And she's going to go from a single family home generating no revenue for her to this 2-unit building now generating $4,500 a month for her, $4,700 a month for her. Fantastic, great rental income. And, one of the things we're talking about is upgrading her HVAC. And she says to me, well, this house doesn't need air conditioning. Like, we don't really need AC here. And I said, Carrie, with all due respect, I understand you don't think so. And I understand your generation maybe didn't. But I said, the newer generation now, the ones you're going to rent to, they're not going to rent something without air conditioning. It's just not how they're wired. It's not how they think. So you're 100% right, Patrick, that stuff that would rent even, and I've seen this shift in the market even in the last couple of years, stuff that would have rented in 2019, 2018, now it's harder and harder and harder to rent. And people, especially older investors that have been in this game for 30, 40, 50 years, and you and I both know a lot of them, they don't understand why it's not good enough. Like, isn't this good enough? But the fact is that these people that are living here, this is their home. This isn't, and the generations are changing to the point where people are not looking at rentals as a stepping stone to buying something. That rental is their home, and they plan to live there for 5, 10, 15 years. Like, this is where I'm going to live. This is my home for the next decade. I want it to be good, and I want it to be nice, and I want it to be new. That's how they think. And as a result, you're right. Old stuff, just not going to rent. Not as well.
Well, I mean, it may always rent, but then you have to look at your tenant profile, and it's not going to be the greatest of tenant profiles. So you're going to be fighting fires on a regular basis. So that's one part of it. If you're good with that tenant profile, and some are, then great. But you're going to be challenged in terms of just sheer volume. And let's not overstep one fundamental thing that I want to shine a light on and not mention is that if the government, and I don't care if it's this federal government who says we're going to cut back on immigration and we're going to cut back on temporary foreign workers, or we're going to if we're going to cut back on temporary anything, which is our tenant profile, ultimately immigration is going to slow down. And whether it's this federal government or the next federal government, immigration is slowing down. That's a huge point of contention with voters. And so therefore, they're going to slow down immigration, and they should. And I believe that they've just lost control of it all, as we all, I think, have come to realize. Aside from housing, we don't have any infrastructure to support it, healthcare being one of those examples of infrastructure. So all of this is to say that as investors, we have to look into the future. We can't make all of our decisions based on what's happening today. So we make a decision based on what's happening today, but we have to make that decision saying, okay, what do I see happening in 3 or 4 years? So ride the boom. Go ahead, ride the wave called I'm going to build, I'm going to develop, I'm going to buy, whatever that story is. But then ask yourself, what is my exit strategy and what is my potential timing? What do I need to pay attention to? That just takes planning.
But there are, Patrick, and you know this, we've seen, I call Alberta Albertario because we've had so many people from Ontario sell their properties, move over to Alberta, and some of them have sold their entire portfolios and moved over to Alberta. And some of them were brilliant. They sold in 2021, 2022 at the top of Ontario, and then bought in on the way up of Alberta. Perfect. But some people are still doing this today. By the way, we're at the bottom in Ontario, and Patrick just told you he thinks we're approaching the top in Alberta. So, if you've made that move today, Patrick, may not be the smartest move. You might be moving sideways for the next 10 years if you make that kind of move today. You got to, and this is where we're going with this. Patrick, you and I talk about this all the time. Is real estate is not universal. There's no such thing as like real estate across Canada. There's no such thing as real estate across, even in provinces, even within the cities within a province, it's different. But what's happening in Alberta is very different than what's happening anywhere else. Because if we look at supply, Patrick, which is our next topic of conversation, unlike what you just said, which is there's a plethora of supply that's in the pipeline in Alberta. It's going to hit the market here in the next year, 2 years, 3 years, and that's going to create a ripple effect in Alberta. That is not the case in Ontario or in BC. In fact, it's the exact opposite, isn't it?
Yeah. I mean, listen, when we look at the Toronto condo market, it is shut down. And, when you look at, and then you say, okay, well, what's going to happen in 4 years? In 4 years is going to be a shortage. Right now, there's like 100,000 units that are empty. Of course, rents are coming down because of that, all of the things that are happening in the condo market. But here's the other side of that. We talk about Canadian averages, which are always, what good are they? I mean, they're benchmark. But right now, even Canadian averages are going to be skewed by the Toronto condo market because sales are going to be down. In terms of volume, prices are going to start to come down. When we look at average rents, that's going to have an impact because they put everything into this one big bucket. So it's going to look like rents are coming way down when in fact, in that particular sector, in that particular property type, yeah, they're coming down, but it's not everywhere and all at once. So I think these numbers are all skewed. You have to really unpack it. So back to the supply issue, one thing that we know is not happening in British Columbia and or a lot in Ontario, many parts of Ontario, is the detached units. These, what we would refer to as single family detached, which we mean by that is 5 units or under 5 units. So duplexes, triplexes, fourplexes. There's not a lot of stuff coming online. It's almost at a standstill. And now Toronto specifically, all those condo projects that are finishing up are going to be done. We're going to see unemployment. I think unemployment is hitting 8% in Toronto proper. And I think we're going to see it spike even further in both British Columbia and Toronto, but primarily in Ontario, we're going to see that construction industry over the next 12 months get really, really soft.
And one of the reasons for this, and this is what you're talking about, Patrick, and I'd be curious to compare the development charges to Alberta versus Ontario. I know them quite intimately in Ontario. I don't know them as well in Alberta. I'd be curious. I assume they're way lower in Alberta than they are. Do you know?
You're not even in the running. Like you can do let's say you do a 6-unit row housing townhouses, you're in for like 25 grand. Like it's almost free, relatively speaking. Like it's
so listen to this. And this is what I'm talking about. I'm in a meeting this week with my planner, with our business partner, and we're talking about this development we're doing. 7 townhomes, 4 on one side of the street, 3 on the other side of the street. And it's kind of like this little subdivision we're building out. And 7 units, And I'm talking about the costs of planning, right? Like, what are the costs going to be? We're going through a spreadsheet of like the cost, the planning costs, and so on and so forth. Patrick, hold on your hats here, brother. Hold on your hats. We're 100 over. We're north of 100K in planning costs, which is all the crap that we got to do, and the engineers and all the experts we have to hire, and so on and so forth. North of 100,000, and then we're 225 in development charges. 225,000. We are now up to 325,000. We've already sunk probably about 15 grand into this. So we're probably at about 350 roughly. We don't have a building permit yet. And like, this is crazy. This is absolutely crazy. And this is the cause of the housing crisis, in my view, in my opinion. But this is what the government has to go after next, is to eliminate this bureaucracy and to reduce these development charges. And Doug Ford's done it on the secondary suites, and he's done it on the coach homes, the ADUs. And I praise him for that. Hats off to him. But we got to do it on the other developments as well now too. This will help us in Ontario.
It's absolutely asinine, the things that are happening. And so when you look at the city of Burnaby here in British Columbia, for example, on the table proposal to increase development fees $100,000 per unit. So on a fourplex, that's $400,000 more in the city of Burnaby. That's what is on the table. That's what their proposal is. So they take the 46 million from the federal government. They took 46 million because that was part of the housing development, cheap housing, whatever that program was that they offered to the municipalities. And municipality says,
yeah, we're going to take that. We're going to open it up. You can build whatever you want, wherever you want. We don't even worry about parking. If it will fit in this envelope, go ahead, build it.
Oh, and by the way, on the table right now is a proposal to increase those development charges $100,000. It's hard to even believe it's happening, but that's what's on the table right now. And this is, both, it's government at every level, by the way.
Yeah, I have noticed, if I look at this chart here for housing starts, you can see Ontario and British Columbia, falling off a cliff. The small provinces are just treading water, as they always do. That's pretty normal for them. Quebec's actually up, which is kind of surprising. I don't do much in Quebec, so I'd have to dig into that a little bit. Alberta's way up, as you predicted and discussed. But one of the things that's fascinating about this, Patrick, is, and I would not have said this 4 years ago, even 2 years ago, but I have seen in the city of Peterborough is credit to that. When they get behind, and the city of Peterborough used to be one of the worst cities that I used to deal with. They were one of the toughest and one of the most difficult to get things through, and it would be nothing but roadblocks. It's much better than it used to be because they were getting behind the more housing initiatives that Doug Ford put out. Is it perfect? Hell no. Could it be better? 1,000 times better. But it's better than it used to be. So if I look at the cup half full, my point is that things can change and things can improve in a relatively short period of time, by the way, because it's only been 2 years that the mandates have been in place. 2 years it's been 1 year that mandate has had royal assent, and I've felt those changes already in 1 year. So it can happen pretty quick, is my point.
Yeah, and especially for somebody like yourself who's in the trenches doing it, you just get momentum and you keep going, and then all of a sudden these changes come in, you take advantage of them, and you just keep going. So that's great. And hey, JG, I just want to point out, was it 4 years ago when you took me on a tour of Peterborough? Do you remember when I looked over to you from the passenger side? I said, dude, you're not investing. You're not buying enough real estate in Peterboroh, by the way. Do you remember when I said that?
I do remember that. Thank you for that, by the way. It was a profitable drive. Let's talk about the economy, Patrick, real quick. We have two more big things we want to cover. The economy, we talked about Stephen Poloz and how he's already said, listen, we're not in a vibe session. We are in a recession, according to the former Bank of Canada. Now, the actual stats right now is the GDP is at 1%. I mean, we are barely treading water here, and we are darn close to neutral. So it feels like a recession, but technically it's not a recession yet. And let me tell you, the government's going to play on that as long as they can.
Listen, I'm going to say what I've said so many times. It doesn't matter. I'll stay with exactly what I've said before. Canada lacks productivity. Even this 1% GDP growth is driven by government and government jobs, consumerism. we just are we've lost all productivity, and ultimately that's what's going to bite us. And when we look into 2025, I on the same page as Polaz. I mean, all he did was really state out loud what we've talked about many times, which is we see rising unemployment, we see too much immigration, we see consumerism and real estate driving the economy instead of productivity, such as manufacturing and real productive type jobs. And I use manufacturing as an example. Our export, U.S. is what's going to eat us our lunch, is that we export more than we import. Or sorry, they're subsidizing us, in Trump's words, right? We do a lot of business with the U.S., and it's just not a fair relationship is how they're looking at it. So ultimately, when we go back to talking about the economy, we're not doing a great job of engaging, selling commodities. We make it tough. Now Trudeau wants to, cap emissions on oil and gas. I mean, the only thing that's driving our economy right now is oil and gas. And I know that's a big statement, but in general, that's just the reality of what's going on. So we see real estate slow down. We see consumerism slow down. We see immigration slow down. That's what was driving our economy. Now we're losing real estate. We're losing immigration, and ultimately less people buying because things have gotten expensive. They're nervous. There's actual insolvencies with business have gone up. There's just a lot of uncertainty. So people aren't spending money.
I was just going to bring that up. Insolvencies definitely have ticked up. You can see it here in this chart. Insolvencies, bankruptcy, consumer proposals, all kind of on the rise in a pretty steep. Some of them in a pretty steep way. And you also see this in the household debt as well, Patrick. Which is and I find it quite fascinating how much we have. For many years, Canada and the US were pretty much in lockstep. We trended each other in many, many different things. But my gosh, since if you look at this particular chart, this business investment per capita chart just shows this massive divergence in like 2015. And it's very different now than it used to be from this perspective.
And that's just the reality of what we're facing. So do I see big headwinds ahead? 100%. I think 2025 is going to be a very, very difficult year. The great divide is definitely happening in terms of, a lot of people go,
no, I'm not at the effect of the economy. The economy's fine.
Okay, well, you're that part of the economy, the service sector and the lower income. And I don't mean poverty type income. I'm suggesting households that have 70, 80, $100,000 a year household incomes are struggling, and especially if they got kids. So the point of it is that we're going to see the great divide get even greater. That kind of middle class is going to get split. Those who have done well will continue to do well because they own assets. This goes back to what we've talked about many times. There's the phrase that everybody is familiar with, the rich get richer. And why is that? Well, primarily because they own assets, JG. And whether those assets are, things that we talk about, precious metals or equities or Bitcoin, that's the thing right now which is happening. We've talked about that many times. But ultimately, real estate. The rich get richer because they own assets. And so for anybody who's looking at this and going, how do I get ahead? Listen, it's a grind, but you have to get assets. And there's lots of ways to do that. We talk about that a lot, but ultimately that's what's happening right now.
Now, one of the things that's happened, Patrick, recently is rents. Rents have declined in October. First time in, I think, 3 years, if I remember right, which is quite something because rents have not been declining, but it's the first time in 3 years. And we've actually talked about this. Here, the stats are coming out, Patrick, but you and I actually talked about this. As it was happening, I was reporting that rents were a little bit soft in October. By the way, that didn't continue. They have rebounded, at least in my particular markets. But we are seeing that rents are definitely, as you can see in this graph, since May, the growth has slowed and slowed and slowed to the point of a decline, and now kind of stabilized, if you will, from my perspective.
Yeah, well, I think it goes back to what I said earlier. When we look at what's happening in the condo market in our two major centers, that being Toronto and Vancouver, that's going to skew the numbers when you look at a Canadian average rent. 100% is going to skew the numbers. So are they getting soft? Yes. But is that right across all property types and right across the board? No.
Now let's talk employment, Patrick. Let's move on to employment because there's been some shifts here. You're talking about Toronto. You were saying that Toronto, is it unemployment rates at 8%? You were saying?
Yeah, I think it's 7.5%, 8%, and some have even said in reality it's over 8%. Because when you look at unemployment, there's those individuals that are still looking for jobs, and there's those individuals that have quit looking for jobs. So the numbers get a little mixed and messy, but ultimately you're looking at Toronto and unemployment at 8%, right around that number or more. So it's just not looking good. There's a lag of this, and it'll start to show up more and more over the coming months.
Now, one of the things that's been happening, we've seen this trend for some time. Fascinating, this chart, though, between 2019 and 2023, what's happened in the employment sector between private and public? As you can see, the public sector has gone up significantly compared to the private sector.
Since the pandemic, 50% at least, 50% of the jobs that were created were public sector jobs. And so, this is something that is unprecedented. Some would argue, well, we needed to do it to keep the economy going, but that goes back to all we did was create consumerism. Then we have to pay for it, called taxes. And it's bureaucracy, which then increases the cost of development charges and increases the cost of everything.
This is the worst.
We have to consider that ultimately public sector, there's certainly lots of public sector jobs needed, but when you get into it the way Canada has over the past 4 or 5 years, you start to realize that the load gets heavy and we're having to pay it. They're non-productive jobs. They are the cost of doing business, but we're not doing business. You would never do this in a company because you would go broke. And that's exactly what's happening to many countries, Canada included. We create layers of bureaucracy. We have costs against it, which we as the general public pay in taxes. And that's just the reality of what we're facing right now. And this is not good news. And this is where the reset has to happen. My concern is that, again, I'm the doom and gloomer boomer, but you look at what's going on economically in Canada, and we do need that reset. We have likely
Are you calling for a great reset right now, Patrick? Is that what you're calling for?
Well, it's going to be really messy because, we got to put up with Trudeau how much more damage he can do over the next 10 months, number one. Then Poilievre's going to come in. He's going to have to blow shit up. It's going to be messy. Again, I want to say really, really as clearly as I possibly can. Real estate investors need to get their capital to work and buy these stores of value. And real estate is one of those stores of value. And quite frankly, JG, I don't care if you want to go to precious metals, if you want to go to Bitcoin, do it. My message, to real estate investors and investors alike is get your capital. Yes, you need to stay liquid. Got it. But whatever spare liquidity you have to get it to work because we are losing the value of our dollar as we speak. I'm even contemplating taking some capital and putting it into a U.S. bank account and letting that ride. I just got to do the math on the fees, et cetera, and what that costs, because you sell and then you buy, and there's always the in between. But my point is, our dollars, we're losing value every day.
Last point on employment, Patrick. This chart here is interesting. Shows monthly change in payroll employment, and really not a whole lot growing here. Not a whole lot growing. Maybe arts, entertainment, recreation, a little bit of a bump. But man, there's some big negative numbers there. Retail, trade, food services, other services, educational services, professional, construction. Those are all high-paying jobs, and they're all way negative.
Yeah, we're seeing it right across, of course, being in the real estate industry, and this, JG, we're seeing, brokers slow down. Some are getting right out of the business. I'm talking about mortgage brokers, but also realtors. Any of those kind of fringe players who got in when things were hot and everybody was a genius, now they're going, holy cow, this is hard work. How do I attract clients? Nobody's borrowing. Nobody's buying real estate, there's no investors left. What do we do? And we're starting to see all of those industries get soft. This is all part of it. And it's hard to be optimistic economically as we look into the future. And a lot of people are fearful of losing their jobs. So they're sitting on the sidelines. Savings rates continue to increase, which means people are just really afraid. So they're going to save as much money as they can for that proverbial rainy day. And that, in fact, has that downward spiral. It's a self-fulfilling prophecy in an economy that's driven by consumerism and real estate.
This has been, Patrick, just to wrap it up here, this has been an interesting chart because you've been talking about this for some time, how a lot of real estate investors are getting out of the do-it-yourself and getting more and more into REITs and other type of, let's call them real estate investment vehicles instead of the actual real estate itself. They do it through a vehicle like whether it's a private real estate investment trust, a REIT, or a public real estate investment trust, or some other type of limited partnership deal or something like that. And I think this chart really illustrates since 2014 how much that part of the business has actually grown.
Well, this goes back to the old phrase, follow the money. And these are the top percentile of people with wealth. And what are they doing? And ultimately, they're going into that private REIT sector, some public REIT, but mostly into the private REIT. And I'm a big fan of that. Been talking a lot about it for the past 3 years. A little bit 4 years ago, I started to see this trend. We've had many people on our stage talk about their own private REITs. And this is a way to get your capital to work. You don't have to qualify for a mortgage. You don't need 200,000 or 100,000 or 400,000 in cash. You can get into some of these private REITs, JG, for $5,000 and start to put your money to work. This goes back to what I just said, which is we have to get our capital out of the bank. If you've got capital just sitting there, you need to get it and put it to work.
Some of them you can get in for as little as $1, Patrick. You and I have been involved in some of those, and they're fantastic. And you know what? There's some people that are investing like literally $200, $250, and then they get like a small dividend, and but at least that $200 doesn't become worth $125 5 years later. It grows. It becomes $250, and then it comes $275, and then $300 and $350, and it just grows, right? So it is fascinating. Last thing I want to touch on, Patrick, I find this quite interesting. I haven't dug into this too much. Maybe you have, but O'Leary Ventures, Kevin O'Leary, man, he's been on the news left, right, and center. He's pretty flamboyant, as we all know. But now with Trump getting in, he has definitely taken advantage of getting on the news. He's been everywhere, but it looks like he's making some pretty big moves in Alberta, specifically with an AI data center. And it is crazy because this is all the rage right now in terms of like getting enough power to power these chips and getting enough data centers, which everything is being chewed up like crazy right now. So O'Leary getting into this. Have you heard anything more about this?
Well, yeah, I mean, I saw the news release. We're sharing here is the news release. Kevin O'Leary, aka Mr. Wonderful. Love him or hate him, he's a business guy. He's a very savvy business guy. He's got an amazing track record for a lot of things that he's done. He's a huge fan of Alberta. He's a huge fan of Danielle Smith, and he's putting his money where his mouth is. And ultimately, that's the thing about Kevin O'Leary. He does a lot of research. He's looking at what's happening politically in Alberta. He's seeing the trend, and he's going, this is where I want to put capital. This is a huge data center. It's a long-term projection. It's a great vision. Danielle Smith, I love Danielle Smith for her business savvy and her willingness and her ability to communicate with business. And that's why, oh, by the way, she's over negotiating deals with the U.S. and what Alberta's going to do in the oil and gas industry. And really, I mean, for all intent and purpose, bypassing Trudeau. And she's doing it openly, so it's not like she's sneaking behind it. But guess who the U.S. wants to talk to? They want to talk to a Danielle Smith. A Kevin O'Leary, a business-savvy guy, wants to talk to Danielle Smith. They want to look in what's happening in Alberta. Alberta's got a lot to offer, not the least of which is a government climate, if you will, a political climate that's far more friendly. And it's, by the way, when we go back to talking about what's happening in Calgary, we're seeing the shift from that political kind of view of the NDP, not quite as orange anymore. I think they're going to switch. I think that's going to change. We'll see what happens. Edmonton is slow to that change, but I think we're going to see that happen over the years to come. But in the meantime, when we look at Alberta as a whole, people want to put their money where politically they feel strong.
Yeah, interesting. And it goes to show you that leadership really does matter, Patrick. And the right leader could make the shifts very, very quickly, and that's important. So time will tell. It will be a beautiful 2025. It's going to be so exciting, Patrick. I know it probably shouldn't be exciting, but man, it's going to be exciting to watch the show of what will unfold in 2025.
So JG, when I look into 2025, it's hard to be optimistic about what's going on economically. I have to stress though, within the chaos, we have to have courage. We have to create the thesis, and this economy is going to drive huge opportunities. Do not ignore what's going on economically, because within all of it, there's going to be some great opportunities and a lot of learning opportunities, but a lot of investment opportunities that are going to start to show up. That's what I got to say about that. And beyond that, Merry Christmas, Happy New Year.
Merry Christmas and Happy New Year. And Patrick, I got to end this show because I have another offer I got to send. The deals are crazy out there in the market. I've sent like 5 offers in the last week and a half. I got another one I got to send. So I got to rock and roll here.
If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.